Janu, welcome.
Hi, Jeff. Thanks for having me on.
My pleasure. How has your week been so far?
It's been pretty good. It's a busy week, as always, in the world of the economy and financial markets.
It's crazy what's happening now in terms of world affairs, the economy. Is there something sort of stuck in your mind that you're thinking about when it comes to world affairs or the economy? Or
well, I think the main theme that the world is facing is inflation. And we've seen signs of that globally last year with COVID, with opening up from COVID, but still facing these supply constraints around the world to try and meet up with this surge in demand. And, those constraints in a way have persisted. There's a new COVID outbreak in China, and that puts at risk further supply constraints on the world, and the war in Ukraine as well, and that impact on energy markets, because Russia is a big exporter of oil and gas, and now it's quite restricted now, and so that's been a reason why oil prices have gone up a lot. And with higher inflation means higher interest rates, and there's a prospect that we will see interest rates higher than what we've seen for a really, really long time, and it'd be interesting to see how the world adjusts to that.
I'm curious about China, Janu. I understand a lot of exports come from the ports in Shanghai and Ningbo, I believe. And is that correct? Or
Shanghai's port is like the largest in the world. So the reports are that the port is running as per usual. So it's not in the lockdown, but you still have to bring the goods or whatever to the port and onto the ships, and there is likely to be some difficulties with that. And potentially workers might be locked down, and it's there is those risks that you'll still see some difficulties in that supply chain.
Is it a simple case of letting these things iron out, Janu, or is it something the government can do to somehow expedite the shipment of goods? Because I never really understood how it sort of works. I read somewhere where maybe it's as simple as stacking the crates higher up so you can store it. But if you don't have enough labor, nothing's going to move. Is that right? Or
but if their priority is to lock down and bring COVID cases down, then I don't know what they can really do. I mean, they have, as I said, kept the ports open, and maybe they can, and which also means they allow workers into that whole system of bringing things in and out, but at the same time, we'll have to wait and see. There have been reports that it's been difficult with the trucking part, so getting people onto trucks and shipping and driving stuff.
Is that because
that's where one of the bottlenecks are?
You mean trucks in terms of people aren't driving them because they've got COVID, or there's not enough trucks?
No, well, it's not that they've got COVID, they're locked down. I mean, a lot of people in Shanghai literally could not leave their houses. And it's eased up a little bit now that people can get out, but they're still facing some pretty tight restrictions. And if they want to and as far as the key messaging has been, that they want to pursue and maintain the zero COVID policy, then to bring down cases to, that to zero, it's going to take quite a while. I mean, they've come down a little bit, and they peaked, I think, somewhere about 30,000 last week, and come down a little bit this week.
So maybe the world needs to stop buying things. Would that solve it? Because to me, you're telling me that if we have truckers, so to speak, who are stuck at home and can't drive it to the port, maybe I'm
talking about the bottleneck in China.
Yeah.
Where there are issues in, there's also the production side as well. So with the lockdown, there's perhaps more difficulty in getting production. So factories did close for a period. They have reopened again in Shanghai, but there are a number which closed for a period and they're trying to operate in some COVID bubble arrangement. But still, it's that uncertainty. There's some other lockdown in the future, particularly if because they want to
stick to that zero COVID policy.
Exactly. So there'll be the risk of another lockdown later on, even when cases come down, say in Shanghai. And it's not just Shanghai, like there's a whole lot of cities and areas in China which are under some form of restriction. So the odds are you'll get some form of restriction having some impact on global production, affecting something somewhere.
So naturally it's going to build up, because if the world keeps demanding goods, these ports in Shanghai are never going to have a rest period, and it's just going to keep barrel rolling it and just get blocked up. Is there really a solution?
Well, I mean, there's the price adjustment, right? Like, so that's why prices go up, and that's why we have inflation. And it's that price impact which means that people won't buy as much.
Hence the rise in interest rates to increase the cost of borrowing.
Hence higher inflation.
Interesting.
Yeah. Bit of economics.
So if that's the case, Janu, could you sort of, is this sort of transitory in a way then? Because I know the whole conversation in the media about, whether inflation is transitory versus permanent. From what you've been sharing with me, it seems that if this bottleneck does get rectified in terms of 6 months, 1 year out, and we have the rise in interest rates to dampen demand, inflation therefore is transitory?
Yes, and there's been a strong case of that, but we've seen these constraints occur for over almost a year now. So the question is, how transitory is transitory when it's a little bit more persistent? And that's something that policymakers need to grapple with when they're setting interest rate policy. But on top of that, say you didn't have these constraints happening at all. Okay. You have economic conditions which don't justify interest rates at near zero, which is where a lot of the markets still are now. In Australia, the RBA hasn't lifted interest rates, and the US Fed has only just started raising interest rates. But the economic conditions which are that there's a strong economy, economic growth is is pretty strong. Unemployment rate extremely low.
People are buying our commodities.
Yeah, commodity prices are high, and
$80 is quite strong, I believe, or because of the purchase of commodities.
Relatively strong.
Yeah.
Yeah. So that all suggests that we shouldn't be having interest rates at zero or near zero. And
so why have we, like, I'm very curious, Janu, because your background, you're an economist.
Yes.
You know it very well. You've been in the industry quite some time now. Correct me if I'm wrong, interest rates were brought down so low because of COVID, obviously. Is that correct? And if things go back to normal, what's holding back the RBA and the Fed from doing it sooner rather than later? I always get confused about that.
I think there's a recognition now, particularly in the US. In the US, there's definitely been that recognition that, okay, we need to bring up interest rates a bit more quickly now. And so you'll see some more aggressive monetary tightening, or as you said, like interest rate hikes. So say, for example, the next couple of meetings, you could see 50 basis point hikes instead of the usual 25, which is what we're used to seeing. In Australia, the RBA has not been as aggressive in that tone, but they're slowly getting to that point where, okay, look, interest rates need to rise a little bit sooner than what we thought, and so the odds are that will raise interest rates pretty soon, if not at least within the next couple of months.
Is it because the whole inflation target band, Janu? Like, you notice it better than anyone else, right? Like, I keep reading that Philip Lowe wants to see sustained inflation within 2 to 3. Now, now what does sustain mean? Does it mean 3 months, 6 months, right? So what I don't understand is, why is he holding back?
I think that comes down to what you just said before, that isn't inflation transitory?
Interesting.
And that's why he's used that word sustainably, having inflation sustainably within 2 to 3%.
But if employment is at its all-time lows, economic growth is going very strong, isn't he worried that there could be overheating? And isn't he concerned that if we have rates so low, there is no other alternative? And like, people aren't going to put their money into a term deposit. So therefore, people need to go up the risk curve. And if people go up the risk curve, I read this morning in AFR, in the lunchtime, AFR is back to its all-time highs. But that's probably because of the fact that the ASX 200 is consisted of the banks and the big commodity guys. I'm fascinated by how it works in terms of the interplay between world affairs, the economy, micro factors. So
if you think back to before COVID, we didn't have inflation for such a long time. Like, inflation as a problem was not even on the radar, and like for decades, really. And I think sometime after the pandemic hit, there was this rethink among central bankers, I think, that, well, we've had such low inflation for so long, what's the harm in having a little bit of inflation? And I think that has contributed to why the Fed itself and the RBA as well in being a little late in withdrawing stimulus and bringing up interest rates.
As in a way of saying, as a reset? Maybe?
Well, it's because that, okay, well, we've had this long period of virtually no inflation that we can afford to have a little bit of inflation, and we'll tolerate inflation being higher than what we normally would. And I think that's put them now in a difficult spot because it just now seems that they're behind the curve.
Hence, there's a lot of criticism about how they're approaching it.
Yeah.
Tough job.
Yeah, I mean, in a way, it's, I mean, from the whole time I've been studying economics and watching what central banks are doing, they've always needed to be a bit preemptive because what they do now affects what happens, down the track. It's not an instantaneous impact completely. So central banks are needed to be a bit more forward-looking in how they set policy. Okay, well, we think the risks to inflation have increased, and then we'll start increasing interest rates and that sort of thing. And so I think in this case, in the last, say last year or even the year before, I think it looked like central banks were just thinking, okay, well, we'd want to see some more evidence of these inflationary pressures being persistent. And so now we're here.
Is that because, so instead of central banks being preemptive, Janu, they're being more reactive now? And therefore you're saying that they're happy to let it run hot a bit?
I think that's why they've been a little late in raising interest rates now, because they've let inflation stay high for
too long.
I mean, I'm not sure we can say it's too long. I think in different circumstances, maybe in a different period, it would seem a little bizarre that there would be persistent inflation above target, plus plus all these other conditions I spoke to you about, like strong economy, low unemployment rate, etc.
And I'm curious, Janu, about globalisation and the mobility of workers. Have those two things helped to stem inflation?
Well, I don't know if we can say that inflation's very stemmed. It is lower in Australia than, say, in other countries around the world. So, and I think that maybe we had a lower starting point in terms of where wage growth was to begin with.
Because wage growth in Australia, that's still quite moderate.
Yes, exactly. And arguably you could say that has given the RBA a bit more time as well. That they haven't had to be so I guess so for coming in.
As opposed to the Fed, for example.
As opposed to the Fed. That's exactly right.
Because the Fed and the RBA, they publish minutes. And it seems that the minutes are reflective of their actions, yet the market tries to bet against the Fed or the RBA when in actual fact it's a fruitless endeavor?
I don't think that the markets are technically going against what the Fed or the RBA are saying. But what has happened is that markets have been running ahead of what the Fed and RBA are saying. So the markets are pricing in a lot of rate hikes, more than what the central bank has been saying. And that has been especially the case for the RBA. So even last year, when the RBA was saying, look, we're not raising rates anytime soon, the market was pricing in a number of hikes already. And now that the RBA is getting closer, the market's just pricing in more. So it's more of a case that the market's just thinking ahead of what the RBA says is going to do, because it's of the mindset that, look, the RBA is a bit behind here, that it will get there.
It's essentially a bet, so to speak. Is that the right term?
Well,
or?
yeah. I mean, yeah, I suppose you could, that's one way of putting it, but it's the market's just, going to reflect the expectation of what might happen.
So who's going to be right and who's going to be wrong?
I think it's more of a case that the market is always going to be ahead of the RBA at this point, until you see some major shifts, which, either something, either the signs are that global growth is slowing quite substantially. Maybe you see a major pullback in commodity prices, or major sell-offs in financial markets. So there could be a number of reasons which could see that turn around. But if barring that from happening, I suspect that markets will continue to keep pricing in, more hikes than what the RBA is suggesting, because it's on the way to hiking. And the RBA's language is very cautious compared to some of the actions that other central banks around the world are doing or planning to do. Now, yes, there are some different conditions in Australia, as we talked about, slow wages, slower growth in wages. Even the rate of inflation is not as high. So, yeah, that makes sense that, we don't have to go as hard so quickly in
Interesting
lifting interest rates. But I mean, the direction in terms of hikes, I think, is higher. And that's the thing, like that differential in pricing between the market and RBA can continue for quite some time, and I think it will, until you see something which shifts the outlook, the economic outlook.
I think since the world is so fixated with growth, I think I'm just going to put it out there, Janu. We'll probably see a rate hike, circa, 1.5. I think there are analysts out there who work out, what is the natural rate of inflation, I believe, and a corresponding rate. I think
it's a natural rate of interest rate, the neutral interest rate.
So can you describe that to us, Janu? Like, what does that mean?
Well, the neutral interest rate is the interest rate where it's neither having an expansionary impact or restrictive impact on the economy. So it has a neutral impact on the economy.
How do you even gauge that?
We don't really know what it is, and it can change over time. So it's something which is just estimated. And look, I think I'm not sure of the most recent estimates from the RBA what that is. I'm not sure if they put one out, but I'd say it's a lot higher. It's a lot higher than what it currently is. So you could see quite a few hikes before we actually even get to a neutral rate. So we'd be at what we say an expansionary monetary policy until you get to that level of neutral interest rate.
Do you think central banks can work independently, or from the markets, for example?
From the markets.
I recollect, correct me if I'm wrong, that back in 2019, I think the Fed did raise it, but then they realized they went too hard, and then they pulled back again. Now, I'm not too sure the specifics as to why. Do they work? Do central banks work in autonomy?
Well, the markets are a reflection of expectations, as you said, and it's also a guide of what the market, or the collective of the market, participants in the market, thinks it should be, right? So I'm not sure if it's that it's a case of them acting independently from what the market does. I think what they do influences the market, I think, but it's not their job to it's not their job to be completely separate and ignore what it does either. But regardless, the central bank should be doing what they think is right for the economy. But at the same time, what the central bank does influence the market. I think the best thing that they can do is not have major, or limit the major fluctuations in the market. And so that's managing the expectations. And I think that's been a pretty key focus of what central bankers do these days. Like, they're very careful in what they say.
I'm a big fan of Dr. Philip Lowe. He stands firm all the time. Likewise for Jerome Powell.
I wonder if that might have something to do with why there's a disconnect as well, because markets, in a way, are pricing in all these hikes. And look, for the RBA, it's, well, when they see the evidence of doing something, they'll start, they'll do it, or raise interest rates. So I think at the same time, like, all of the Fed speakers have come out and managed those expectations ahead of time as well. So they know they have that influence on the market.
They do. They can really turn the tides.
Exactly. So by saying the things that they do, they know it's going to really shift what markets are thinking. It's probably an intentional thing.
Intentional
to get the market to move closer to where they're expecting. So in a
sort
way,
of it goes hand in hand somewhat.
yes. So in a way, what I'm saying is that maybe for Philip Lowe, the stance that they're taking is about, in a way, trying to bring down expectations, because if they do say something, then maybe there's a risk that expectations will run further away from them, if you know what I mean.
Hence their wording. They need to be super careful.
Yeah, that's exactly right. That's exactly right.
So in your expertise, Janu, do you pay any attention to the share market or the bond market, or do you primarily focus on the economics of a society?
Yeah, no, I'll look at financial markets quite carefully as well.
Because you and I had a conversation before about, how can you present economics in a much more meaningful way, and how does the everyday person get to your level of understanding all this? Like it's fascinating, but also I'm in my head going, okay, in terms of how it all works, but it makes sense, does it?
Yeah. So I have been. I'm an economist by profession, and so I've been doing this for a long time.
I can tell.
Yes, but it doesn't mean that everyday people can't understand what is going on and why things are the way they are. I like to think that our job as economists are to bridge that gap so that everyday people can understand and see how that relates to their everyday lives, whether it be the mortgage rate that they're getting on their home loan, or their job prospects or investments in.
I need to borrow money to start a business.
Exactly. Or if you own a business, what the economic conditions are, like what, and if you're dealing with firms internationally, how that impacts the currency. So there's all these factors which are going to affect you relating to economics and financial markets that are going to be of huge benefit to people in probably ways that they don't even realize or understand.
So how are you about to bridge that gap? That's very fascinating way of describing what economist does. That's very new to me. I think that's a very lovely way of describing it. So how are you going to achieve that?
Well, I mean, this is my aim of my site that I've started, and which is called Bite-Size Economics.
Bite-Size Economics.
Bite-Size Economics.
.com?
.com, yes.
Okay.
So it's in its infancy, so I'm still working things out, and I think that you just try out different things, and
you do,
and just see what works. So look, I have an ultimate aim of bringing economics to the people.
Of that mission.
Yes. And in the meantime, it's about how do I do that? The name itself, Bite-Sized Economics, is my first aim was I needed to make it short and I needed to make it succinct. None of these long-winded reports. So if I do, I mean, I actually quite enjoy writing in-depth pieces, so I probably can't get away from that completely. But I mean, there's always I think there's a limit of, say, a a page of in each article I write. No longer than that. The other thing is looking at other ways to show economics and financial markets development. So it might be a chart, it might be a graph of some sort, or it might be a combination of the two, like of a chart and some commentary along with it. And some of these, a picture can tell a big story, right?
Yeah, because if you're showing me all numbers and a 10-page report about the RBA minutes, I'm not going to read it and I probably don't understand it.
Yeah. And I think the other thing is that we, in terms of information about the economy and markets, we get it constantly, every day. There's always something going on, and some shift in language. And to be honest, like I don't know if people really, if it's really that important to the everyday person. Like, say, for example, and I think another good example is that, look, I've said today the RBA is on its way to hiking interest rates, and quite a fair bit, I'd say. We're looking, at least above 1%, and maybe pretty quickly.
Big jump.
Yeah. And the thing is, that's not even that high interest rate in the.
But I think since we're always zero,
I think it could even go to 2, or even beyond that. So, but I mean, like that's what most people just need to know. Do they really need to know? Is it going to be May in which I hike, or June? Like, I mean, to most people, I'm not sure if that's.
No, it doesn't matter.
That's particularly important.
Maybe if you're a financial markets participant.
If you're a trader, yeah, maybe. I think that might be important. But I think in the scheme of things, for everyday people, that's not really that important. So, I mean, this is a sort of example. I think it's about. So another aspect to what I'm doing is that I'd like to just bring it like the key points. So one of the newsletters that I'm putting out is called 5 Things You Should Know About the Economy, which is something
I'll sign up.
It is something which I try to do once a week or every 2 weeks. There's no real I haven't set myself a really hard and fast rule of when that goes out. It's more about when economic developments are relevant that I'll put that out there. So that's one aspect, and just maybe those 5 things that you should know, and then a short paragraph on what that might actually mean. So
for your target market, so are you therefore writing for the everyday person, or are you writing for market participants?
It is less for market participants.
Because you want to bring it to everyone.
Yes. But I do also realise that I need to get that interest in those everyday people, because I mean, there is that. I'm aware of that perception that economics is dry and boring.
It's fascinating.
It's very, very interesting.
I think it's very interesting from talking to you.
Yeah. And I could keep talking about it for this whole podcast.
You can.
Yeah.
Where did it come from? Where, like, it's a lovely mission for you as an economist to try to present it in a way that makes it easier for people to understand. Hence, bite-sized economics makes perfect sense. Where did that
Yes.
come from? Like, you've been an economist, you've been in a corporate organization.
Yeah.
Where did that come from? This mission?
Well, I've also come from, in my role at the bank at Westpac and St George. There was some. I think the role I had there was an emphasis on making economics easy to understand for people, and I think, and I found that to be very important in terms of the people who, want to digest this sort of stuff, right? And which is important for them. So that idea is, I think, been with me from working in the bank. We been representing some of the St George Bank in Melbourne, Bank SA brands there as well. A lot of our clients, they needed that as well. Like they needed someone to present things in a way which they can understand and is going to be relevant to them. And I think more and more, and what's interesting is that coming to Asia, I do find that economists here are even more so available to the high end of town institutional investors and traders, but not a lot for other people who are just investing on their own. So retail investors, for example, or everyday people. And so exploring that idea here as well.
It's lovely. It's lovely.
And I think also being in Hong Kong too, I'm finding it's helpful having some kind of voice in Asia which can bring that style of economics in this region and what's going on here back to Australia as well, and not just Australia, like wherever it can be useful. With this kind of, and I guess also like with this podcast, right? Like your audience, you don't really know where it could come from either. Like it could really be anywhere in the world.
Correct. And that's the plan. I was very on, you asked me a great question last time. I don't know. And we are just trying. We are just trying. I'm enjoying it.
Yeah. Yeah. So I had one friend say to me, she's got a marketing background. She asked me the same question, who's your audience? And I'm like, oh, well, people who want to know economics, like, and she goes, oh, well, who are the people who are reading your stuff and commenting on social media, blah, 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 blah. And she goes, though that is your audience. And so, okay, all right. It is a little helpful because I think it does make me realise, yes, there is, as much as vague as what I think I say my audience is, it's like, well, actually, they're there, right? Like then they're not necessarily of financial market background. That they need that there is a level of interest in what's going on, right?
Mm.
So yeah, and also just like a level of understanding. I'm not sure how we got to a point where, and particularly, and I feel like this is the case in Asia, where the experts are very close to talking to, and just like experts who need that information to everyday people where it's going to be important to them in some aspect, but not really having access to that.
Sorry, Janu. So you're saying that economists in Asia are closer to the everyday?
No. I mean, like closer to experts, other experts in the field.
More community orientated, maybe?
Well, I mean, like, so the economists working for banks, but not necessarily retail, which have like a retail or big corporate retail sector, like say the big banks in Australia. So I mean, a good comparison is, so in Australia we have the big four banks: CBA, ANZ, Westpac, NAB, right? And they have economics coverage there, with the awareness that they are servicing a pretty wide client base, right? So they need to make it easy to understand and relevant for all those sorts of people, right? Here, I get the sense that economists here are predominantly servicing the higher end of town, because the banks here would predominantly be like a lot of investment banks and global banks.
Why is that? Why is that, Janu? Is that the nature of Asia being more closer to the major financial centers? Or that's a good point.
I'm not sure. I know that I've noticed in Australia having that branding aspect of like the economics team was quite important. I don't get the sense it's as important here. And branding. It might be just because they've got maybe big global names already. Yeah, I think I can only see that as the main reason. There is another factor is also the censorship. To be very forthright about the economy, particularly with China, mainland China, it's you need to be careful with. There is a bit more politically sensitive,
and makes sense given the nature of where Hong Kong is based.
Exactly. So I think that's probably another factor.
Interesting.
Yeah.
And have you met other economists in Hong Kong?
Yeah. I've spoken to one or two. It's and in Asia I've spoken to one or two as well. Like, so just.
Are they very Asia focused, global focused? Is there some sort of commonality, or it just depends?
It depends. It depends.
Interesting.
So there's a lot of focus on Asia, a lot which, and I think that's with everywhere. Like they like, they'd like something, to know what's going on in China, but there's also Asia as well, which is a very big region.
It is, and you got the US,
exactly. So, So less. I mean, there's less that want expertise in Europe and the US because otherwise they'd be based over there, right? But if you don't have some kind of knowledge of Europe and the US, then you can't really call yourself, you can't really have a good understanding of what's going on in the world. I mean, it's the same as if you were in the US or Europe and you had no idea what was going on in China, but you don't really understand what's going on in the world.
Because those markets, the US and China, these are the big ones.
Yes.
They really drive the world.
Yeah. They're just a big chunk of the global economy that you need to have some idea.
Interesting. So you going to Hong Kong has been quite a journey in terms of opening up your eyes.
Yeah, absolutely. It's quite interesting how I think people view financial market information and economic information here.
In what way?
Well, so I do see an element of people being very focused on what's going to make them money, and not just make money quickly. They want the hottest new thing, what's hot right now. So it's very fad kind of base. It's very equity focused as well. So a lot of the analysis and interest is in the equity market here, which a lot of the equities are leveraged on China and what's going on there. Because
equities are a great bellwether for how the country is performing, so to speak, in terms of the provision of goods and services.
Yeah.
But I think the bond market is also quite important.
I have to say, in China's case, it's very policy driven as well. So, for example, the property sector, and I mean, I think you must know, it's been in trouble in China for the last year or so, in a lot of trouble.
Evergrande
being one of the headline acts.
It seems to have dropped off the media.
Yes, it doesn't mean it's not there. It's just that
the media has moved on.
That's just a great reflection of how much is going on right now. And in China itself, policymakers are all focused on what's going on with COVID, as that's their priority now.
But this COVID bottleneck supply chain is not going to go away.
Yeah. So going back to what's being policy driven, what triggered it, or was the government coming in and saying, look, there's too much leverage in the sector. You need to meet all of these requirements now, which they've called a three red lines policy. And a lot of property developers did not meet those requirements, so they had to massively deleverage. And so you think about it, all these developers are trying to deleverage at the same time. I mean, meaning that they all need to sell these assets, and particularly the case of Evergrande, even the market knowing, look, Like, how are they going to do that? Like, they need to deleverage a lot. And it's difficult for a company to, crawl out of this hole when they're all of a sudden faced with like this massive deleveraging that's required all at the same time. But what I'm saying is that was a policy decision. We're not going to support this massive run up from leverage in property sector anymore.
As opposed to other markets where it's very much free economy.
Oh, I'm not sure if I'd say that either, because if that was completely the case, then because the government has also come in and said, look, we want to help support the equity market, and they have to put in some policies in place to try and do that as well. So it's an economy where the government has quite tight control over a lot of things. So you need to understand what the government has in mind to understand what the sectors are going to do well. Like, so they'd be the ones which are favoured in the government's mind.
And it's a very different approach compared to the US market,
exactly.
the Australian market.
So you can't think of it completely like you would in a free market economy. And Evergrande's a great example of that. I mean, when it was in trouble, it seemed like if a company of that size defaulted in, in say the US or Australia, the flow-on consequences would have been much, much worse, because it wouldn't have been that kind of managed, controlled,
from a policy point of view,
control in the background. I mean, the other thing, like if Evergrande defaulted so much later than what it would have been if it were, say, in the US.
How much are we talking about? I'm curious. Like, I read the media, but I don't get it. To be honest with you.
Well, the thing is, we don't actually know for sure. The estimate that I saw was it had maybe 300 billion worth of liabilities.
But that would be on the financial statements, wouldn't that be? So it'd be very clear.
Yeah, but they have a lot of offshore, like, we don't know what's offshore. Off balance sheet liabilities. We don't know about them.
But 300 billion, for example, US for China, that's nothing, relatively, I think. Maybe, if you have that control in the background.
I don't think it's nothing.
So what's happening then?
But the thing is, you have that control in the background, which means you don't have it isn't going to trigger a calamitous GFC style collapse,
because right? It's being controlled in the background,
where you see like this massive panic selling of everything, right? And credit markets seizing up soon. No banks can lend to each other. It's that's
contagion. That's contagion, so to speak.
Exactly. But it doesn't mean they're not in trouble, because they still have to. There's still all these
liabilities that need to be
liabilities paid. People have claims on, whether they be contractors who have done work for them, or There are also investors, like retail investors, who have bought into some of their products. There are, and God knows what else. Like there's
because it could be off balance
and there's
sheet,
all the unfinished apartments as well. All those unfinished apartments that
this could really create a massive ripple.
Probably had deposits on, and no way of knowing whether they get their deposit back, or if they even get a finished apartment. And I think it's still created. There's still a real loss of confidence among potential home buyers. Like, why are they buying another property when they don't know if they get the apartment or even that money back?
In a way, it could really destabilize society.
Absolutely, absolutely. And the authorities are pretty aware of it. I think they're not only alarmed about the economy itself, but you know, that it's probably gone far enough. And yeah, so there's still a bit to play out. Another problem has been that the developers, even the ones which weren't in trouble, in terms of which were seen as more stable and, well, financially more secure, even some of them like they need to get refinancing somehow. And how do they get that when, you know, so particularly overseas, there's investors which are very reluctant to invest in this sector.
But at the same time, China seems to be going against what the world is doing, and their policy is still quite loose. Is that correct?
It's loose. Monetary policy is loosening, but not very substantially.
Okay, so not too much where it creates exuberance.
Yeah. And perhaps the concerns about inflation have something to do with it, because they're also facing higher commodity prices, which can feed into higher inflation. And you know, there's potential capacity constraints as a result of COVID now in the country. So I wonder if there is some concern about that. There might also be some concern in the back of their mind that they want less to come from, you know, another greater lending, say, to the housing market. Although I'm not sure if, like, bringing down interest rates a lot is going to make that much of a difference, to be honest. I think the main source of support that the government's looking to is going to be through the government fiscal policy. They're spending on infrastructure and that kind of thing.
What's fiscal policy? I thought everything was monetary policy.
Well, fiscal policy is government spending. So monetary policy is the central bank. And so they can increase or decrease interest rates to
fiscal is more government. The government handles
fiscal
that.
policy is government spending. And so the government can spend more to support the economy or spend less.
Did we get this is fascinating. Do we get much from this year's budget on what their fiscal spending was going to be? It seemed very reduce the cost of living. Here's $300 to fight that. I'm like, okay, what about going forward? How are we working to better?
It was pretty modest, but I mean, I guess there was something. The government in a way, it is also, I mean, because we're also in an environment where the deficit is quite large. So it's about what's the appropriate level of spending for the economy right now. And we're, you know, with the economy doing reasonably well, low unemployment rate, and also all indications that our monetary policy is going to tighten, then it doesn't make sense for the government to be spending a lot. So, you know, if you go back to COVID and in the pandemic, and for support, the government did a huge amount. Like they had JobKeeper, which was a huge spend on the government's part. And then they had all these other support programs, but the biggest one was the JobKeeper. And so now there isn't a real need for, you know, big government spending now.
Shouldn't the government be thinking long term? But shouldn't the government be thinking long term?
Absolutely. I completely agree with that.
Because from what I read, you know, like, please correct if I'm wrong, if our commodities are being bought up left, right, and center, from coal to iron ore to copper to rare earths, and iron ore is trading at $150 a ton, for example, when the budget has only factored in a sell price of $60 a ton, aren't we getting more revenue? Hence, if we're getting more revenue, wouldn't that give us the ability to go, okay, we're getting this large amount of revenue from the commodities that we're selling. Shouldn't we then put in the foundation now to have that growth in 5 years' time? I don't know.
Absolutely. What is going to be that spending for that foundation for growth in 5 years' time, though? That's the big question.
Education, childcare. Education, I think education, you're going to take onto a different track. I think education would be, I think educating the next generation of our children, I think that's going to be a fantastic investment.
I completely agree with you. Definitely.
So wouldn't it be right for the government to do that? You know, like, I never really understood. I put it out there. Yeah. I never really understood the whole budget deficit and surplus until I got older. And then I realized, if you got so much tax receipt coming in terms of taxes, wouldn't it be wise for the government in question to think long term, so that in 5 years' time, we build the base for our next generation to succeed? I
absolutely agree with you.
No, I don't know.
No, you're absolutely spot on, Jeff. And it's something that we might argue about, and as an economist, argue about for many, and I have argued at many budgets. Where is the long-term planning? Where is the investment for the future? Where is that? And where is it's more about that vision. Where's the vision?
Where's the vision? Where's the foresight?
Exactly. And this happened every budget, I have to say. Why don't they do that? Like, it's...
No, I'm curious. Why don't they do that, Janu? Like, I don't understand. I really don't understand.
It's the short-sightedness of our election cycle, right? Like, why would the government think out 5 years in advance when they've got to think about the election, which is next month?
Okay, so that means that in
this case, and the next election, another 3 years, they're not thinking beyond that.
So it's a nature of how our election cycles work.
Yes.
I read a funny quote the other day where
I
China
think so.
China thinks in dynasties. Everyone else thinks in election cycles.
Well, yeah, but I don't know if I quite agree with that, because China does have election cycles, and there is talk. Well, I mean, one of the theories why China hasn't dropped the zero COVID policy is because there's the elections, equivalent of the elections, the end of this year.
So inevitably, the political aspect will always creep in to economic policy, the social policy, the financial policy.
Yes, but doesn't it always?
It's understandable.
Wherever you go.
So that means I have your vote, in 2034, where it's yes, we can.
Well, if like, I love a politician to actually have that long-term vision and foresight, who's not thinking about their own term. And I think,
I'm afraid that person might not get elected.
I wonder if they try to, but don't get elected. I mean, that's part of the issue.
That's sort of an interesting conversation, isn't it?
Yeah, that's right.
Because to me, it seems to make sense that you would do that. But you make a good point, because if our election cycles are quite short term, you don't have that long-term thinking. So why would you enact the policy which will only yield something in 5 years' time, when you could get kicked out, so to speak, in 3-4 years' time, whatever?
Yeah, they'll only want to work out what, like, the incentive is to only work out what's going to be beneficial for them.
Human nature.
Exactly. Yeah, and that's and aren't we all just our behavior is always going to be a symptom of the system that we're operating in, really.
I'm trying to think if there's an alternate system.
Well, yeah, like, is there an alternate system? I think this argument has been posed in the past, that do we need longer terms in Australia?
But that could be a double-edged sword.
Hey?
That could be a double-edged sword.
Yeah.
I don't know. I don't think there is an answer to it, is there?
Yeah,
but maybe we need to try.
Yeah, and I there has been a debate about it in the past. There's arguments against it as well. So
there always will be.
Yeah, exactly. So, but I mean, if you wanted to address this issue of short-sightedness in our policy, that could address it in some way.
Is that are you posing a challenge to me, Janu, to for me to do that?
Well, I'm just saying, I'm just playing hypotheticals here, right?
Maybe you're going to join my campaign in 2034, or?
Oh, I'll vote for you.
Okay. This is recorded, by the way, Janu, so you can't back out of this one.
Yeah, look, I don't know if there's a really good answer to that.
I don't think there is. I don't think we need a good answer.
Yeah.
I think we just need to work together.
I think you're also raising the question of, like, what system is better than the one we have, right?
That's true. That's a whole entire different argument we can go down towards. You know,
So,
Janu, it's almost 1.5 hours since we've been speaking.
wow.
There's the person to me who originally said to me, I'm not too sure what I would say, but this has been a lovely conversation. So therefore, I think we need to have part 2. Is that correct?
Okay, of course.
Janu, I'm conscious of making sure you're right. Economics, I think you and I, we could probably go maybe the whole night, maybe. I think we can.
You could keep talking. I could keep talking.
I think we could, because you just
Yeah.
open up another interesting question that got me thinking about the whole, system of government, thinking long term. Do we need to extend election cycles to allow candidates to think long term, and therefore that's the way for us to really invest in our kids going forward. Okay.
Really, really good questions, Jeff. This is a great discussion.
Yeah, okay. Definitely part 2. Now, Janu, there's a reason why I'm doing this, and this is a perfect reason. It's a fantastic conversation. It's been very positive, and I also want to make sure I end it on the positive. So how about we break it up a bit? Let's move away from world affairs. Let's move away from the economy. Paint me a picture in 30 years' time. Where are you? Where are you? Where are you eating something? Are you with someone? Are you in a certain place? Paint me a picture.
Something about me is that I'm a very go with the flow kind of person. I don't really have to know where I'm going to be even next year or so. So 30 years, I got no
Too far
clue.
away.
Well, yeah, way too far. But I can't even tell you next year, right? 30 years, no clue either. But I think that's part of the beauty of it, in that I don't really have to know. And I'm completely okay with not knowing. And that's part of the fun, right?
Fantastic answer.
I would like to say I'll be happy and content and just at peace with life, whatever I'm doing. That's what I'd like to be. That's what I'd like to see.
Normally, I would end the podcast by saying, is there any final remarks? But I think you said it perfectly, Janu.
You ended there.
It's been a pleasure.
Thank you, Joe. Thanks for having me on. It's been a great chat.
Lovely.